Now, what is the difference between balance of payment and balance of trade? Under balance of trade, there is all economic transactions relating to export and imports. However, in balance of payment, we take into account all the economic transactions. So in balance of trade, it is about imports and exports. Balance of payment, all the economic transactions. Secondly, under balance of trade, we are dealing with only visible items. Under balance of payment, we are dealing with visible items, invisible items, unilateral transfers, capital borrowings, everything. Okay? Thus, balance of trade is a incomplete record and balance of payment is a complete record. Now, under balance, what are the components? And the next topic is what are the components of balance of payment? Balance of payment has got two accounts, capital account and current account. Now, what are the components under current account? Under current account, it includes all those economic transactions between the residents of the country and the rest of the world which do not change the liabilities and the assets of the residents of the country. It includes all the economic transactions between the residents of the country and the rest of the world which do not affect or change the liability and assets of the residents of the country. Okay, so under the current account we have visible items, invisible items, unilateral transfers and income from investment on work. Now, obviously in the balance of trade, I discussed about the visible items, how is it getting in, how the entry is done. Okay, like in the visible items, if I say how the entry is done in the current account, like the one which we are exporting outside, okay, it will come to the credit side as we are earning foreign exchange, and when we are importing, that means we are giving foreign exchange, so the imports will come under the debit side. Okay, so payment for imports on the debit side, payment for exports in the credit side. Balance of these visible items, that is export and import, is called the balance of trade. Now, the next are the invisible items. Okay, now this includes the services that we purchase and provide. Okay, so the services that are being bought, brought as well as provided between the residents of the country and the rest of the world comes under this category. Now, it includes, what did I say? Shipping, banking, insurance services. Okay, so now payments to these services, when we purchase these services from abroad, we need to do payment. So the payment for these services is a negative thing because we have to pay in foreign currency. It is coming in the debit side. And when we are providing these services, okay, so we get receipts. So we receive payment. So it comes under the credit side. Balance of these two columns brings about balance of trade in the invisible items. Now, the next is unilateral transfer. Now, in this case, what did I say earlier? It is a one-sided transaction, means donations, gifts, as well as if anybody works abroad, when they send money to their family. So all these means remittances. So all these things comes under this unilateral transfer and is a one-sided payment. So when we do such donations, when we give gifts in the form of money, or when we are sending money to the people in abroad, all these are coming under the debit side. But when we are getting, it is coming under the credit side. Again, balance of these two columns is called balance of trade in unilateral transfers. Now, the last component is income from the investment. Like, what did I say? When, like, we earn dividends, interest, profits, okay, from investment in abroad. All these things comes under this category. So, dividends earned from investment, interest on capital, and profit from the branches of Indian company in abroad. So, dividends from investment, interest from capital, profits earned from the branches of Indian companies in abroad, all these things will come under the credit side of the payment. Now, why it will come in the credit side? Because we are receiving money. Now, for above all these items, if we have to do payments, then it will come under the debit side. Again, equalizing these two columns, it will call balance in investment from work. So, in the current account, we have got these 4 items. Now, we will go to the capital account.